Hey, everybody, welcome back to another episode of the Growth Capital Podcast. I'm your host, Justin Dixon, and today we've got Scott Phillips on the pod. He is the Managing Director of Portfolio Operations with Oryx Capital Partners. It's a really interesting episode because Oryx Capital Partners takes a very operationally focused role within their portfolio companies. They focus on industrial services organizations in kind of the mid-market space of the private equity world. And so we dig really deep into some of the key pillars of their approach when they go into an acquisition, the key pillars that kind of drive the most gain and the most return for their investors. And then we talk about some of the strategies around human capital and the key components and the key people within these organizations that they need to assess both during and after acquisition to make sure that they have the right people in the right seats. So very interesting episode. So let's get Scott on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. All right, Scott, man, thank you for being on the podcast.
Yeah, pleasure to be with you, Justin.
Awesome. Well, let's kind of get things started off here. Maybe give the audience a little bit of an overview of who you are, where you are, and what you're up to.
Yeah, sure. So Scott Phillips, I'm the operating partner here, lead our operations team at Oryx Capital Partners. Oryx Capital Partners is a mid-market firm. We're actually part of the Oryx Corporation. So basically, we get a lot of our capital from Japan, which is the parent company, but also additional third-party capital. We invest mainly in business services, more specifically industrial services. We're in our first fund. We deployed about, call it $800 million of capital so far. And we're an operationally focused firm. So we have myself and a couple other partners that really drive value creation through the life cycle of the portfolio company.
And being part of kind of the larger Oryx entity, like how does that work when you guys are going out? Obviously, it sounds like you get a lot of capital from them, but are you then kind of pitching deals to the parent, or how does the kind of the deal sourcing and acquisition side work?
Yeah, fundamentally, how that works is we go out and we have a thesis-driven approach to the market. So we're looking for the right size and the right type of companies with the right growth projections. And then we go ahead and gather that and we pitch that back to, it's more deal by deal, but back to the parent company and say, is this something that you want to invest? And really they may make a decision on that from their perspective and then go forward. And we have an IC specifically with the Japanese partner involved.
Got it. And being in your first fund, you said you've deployed about $800 million in capital. Was it a closed fund, or is it kind of open and you're going to continue to raise and deploy, or how does that fund structure work with you guys? Yeah,
again, it's deal by deal. At this point, we've started this fund in 2015, so we continue to deploy capital now. It's most of our strategy is built around a buy and build. So we'll go ahead and invest in a platform and continue to do a lot of add-on acquisitions. We've done, roughly 20 of them through the life of this fund right now. So we continue to deploy that way. But ultimately, we're getting close to more of an exit type of scenario with the fund, and then looking to continue this on probably in a fund 2 kind of vehicle.
Got it. Interesting. Can you share a little bit more about you mentioned a thesis-driven approach, and you mentioned that you focus on kind of the industrial services space. And I'm always curious kind of, as I talk to other private equity firms, what their criteria are or theses are when it comes to the deals that they target, as they're going through due diligence and all of that. Can you share a little more about that?
Yeah. Specifically, we like to, basically look at either the first or second bite of the apple, meaning these are either founder-owned or founder-led, or maybe they've had their first taste of institutional capital. We come in and we look to build a platform that you can add on. Again, buy and build is mainly our strategy. We focus really in the industrial services space, so we're looking at companies somewhere around, let's call it 15 to 30 million of EBITDA. We're writing equity checks of about $100 million when we build out the first platform. And then really looking at sectors that are recessionary proof. There's quite a bit of trend right now in infrastructure. So a lot of our investments are really built around the infrastructure play. Think about like fiber deployment and some of the BEAD funding and infrastructure funding occurring there. The sewer, electrical grid, utilities, those kind of hard assets. So we really like to build a platform around that, and then look at, is it a fragmented space that we can do continuous add-on acquisitions to really build out that platform.
Interesting. And then when it comes to these founder-led businesses, are they typically, they're obviously fairly substantial, given that you're in that 15 to 30 million of EBITDA, so they're not, lifestyle businesses, obviously. But when you come to the types of businesses, it seems like they've got some moats around them, if you will, when it comes to like competition. Are you trying to target ones that have the biggest moat, so there's less opportunity for other similar PEs to come in and buy a competitor and attack you that way?
Yeah, I mean, really, you're looking for differentiation of any kind. So, that could be where you are the lead regional player. Specifically, if you take like an industry like utility contracting, for example, usually there's a super regional that you own a majority share of the local contract. But then the question is, can you build a strategy around, M&A growth, finding those regional players and rolling them together to build out a bigger platform? Or is there someone that really offers a competitive service that they are the best or performing the best or nearly the best, and you could really build around that in a fragmented industry? So that's really what we're looking for, is some type of differential offering for the initial investment, and then what can we add to it operationally with some of the expertise and some things that we can bring from our team, specifically around labor management, maybe some scale when you think about procurement or fleet, strategic ideas about how to grow, and then really access to capital. We've had several situations where, the company is just capital limited, and that's where Oryx can come and partner along, bring the excess capital that brings some trust to their customers, and then really can grow and accelerate the growth there just by bringing capital to the business.
Yeah, your background specifically is kind of interesting, and Oryx is kind of a somewhat unique model in its operational focus, right? You really want to find deals, it sounds like, that you can not only invest in and then bolt on, but also bring in folks like yourselves and other operations people that can add value to that business, right? Can you kind of share a little bit more about maybe some of the strategies when you're looking at companies to say, okay, this is an area that we can, bring in our expert that knows X, Y, and Z, and really move the needle in a positive direction based on that, that person or that strategy coming into play?
Yeah. The fundamental starting point of all this is a partnership model that we have, with the management team. None of this you can do on your own, or none of it they can do on their own. You really need to find a partnership and spending time with the investment up front. With that, the pillars of our value creation is really building, what we call the critical few objectives. What are the things that really could move the needle initially with the investment that really benefits their shareholders across the board? And then when you think about that, what are the specific initiatives is really defining that up front. And then, what expertise can we bring? What expertise you look to third parties to bring in? What can we do to do this? So that may be, what can we do on, let's call it a fleet program. We have, a lot of vehicles and fleet management that we can have across a portfolio. So we have a program around that, or insurance, or operating philosophy around labor management. These are all tools and things that we could bring into the investment. But fundamentally, we really think about what are the key pillars to grow the business. How do we bring those expertise and really driving an agenda throughout the life cycle? And that keeps us really focused in terms of what the goals are.
Yeah. And are you guys taking majority ownership in these deals? Yes. When you're buying them?
Yeah, all deals are majority ownership.
Okay. And then, in this pillar model of value creation, are there kind of table stakes value, pillars that you just know by bringing in your expertise? Something you mentioned earlier, like they can't do it alone, you guys can't do it alone, so there has to be this partnership. Are there one or two that you like know are really easy pillars that you can kind of institute kind of almost day one, or at least start the process early on in the post acquisition era to really drive growth that have like the biggest impact?
Yeah, well, I wouldn't say the biggest impact because I think there's always unique situations with each
Mm.
company that usually drives the most value. But we do have standardized playbooks that we've created that really are, let's say, tools that we pull off the shelf to use them. So, for example, we've created, I don't know, for example, on the insurance and benefit side and healthcare costs. Usually these are smaller companies that really haven't considered leveraging a larger buy in that
Mm.
space. So we have a program that we can immediately get them on once we have that and get some value across that. Same thing with procurement. You could bring in any materials that you could buy. We have procurement programs that we lay right on top of the companies on a day one kind of aspect of it. As well as we really look at some of the systems and some of the processes that they have and what can we accelerate, which is operational tools and excellence around that. We also think about quality. Quality is a key indicator, even in service businesses. So really, we have a quality control and measuring system where we look at some of the feedback that they're getting from the customers to really focus on the customer aspect. And that's another program that we could do day one. So those are just kind of basic operational improvements that we have playbooks for. But then really, we got to look at holistically, what is the growth engine of the company as well. So you can only, work on operations, which are really important, margin improvement so much, but what are we doing about growing the company? That's where we have playbooks specifically around go-to-market, sales effectiveness, and really it gets back to what is the overall strategy? Are we doing a buy and build? Are we going to grow organically? What are the tools and the other aspects that are very unique to the company that we need to do to execute on that?
That's interesting. And when you bring in, or maybe even before you acquire the business, how do you think about or evaluate the talent within the company? Because these are services businesses, so they have a talent component to it. How do you kind of do due diligence on the operational talent internally so that okay, we've got a good management team or middle management team, and we don't have to do too much to improve that, or there's some key gaps, whether it's a person or people that need to be adjusted out, or just maybe clear gaps in their talent ecosystem that they need to address?
Yeah, no, that's a very good question. So we do have we call it a human capital angle to this, and we have a professional that comes in and does that. I find it, to be frank with you, very challenging to do during the diligence stage, as much as you like
Mm.
to say that it is. Those are typically when people are on their best behavior, let's say,
Right.
on both sides of the table. And,
Yeah.
in this dating relationship. So it's very hard to gauge what actually is going on. So you try to do as much as you can in diligence. Really, we're making sure we understand, how the company is managed, who's really the leadership, and then try to identify the key people. And those key people we either need to retain or really assess where it is. And then typically after closing, you like to say within the first 100 days, there's always this magic 100-day number, but I'm not a firm believer of that. I think it's more of a ongoing process of building relationships. Then it's really key to understand, let's say, what is that level 2, that level 3 capability in the
Mm.
organization. And then even at the level 1, you find if you have the wrong people in the wrong seats, usually you're not able to execute on the plan. So I would say within the first quarter, we kind of identify, and then we do have this, as a normal frequency of our quarterly board meetings. At least one of them, we focus really on human capital, but it's really identifying then are the right people in the right seats, and then trying to act with a sense of urgency to make some of those moves, which can be challenging at times. But I think the more you really need to make a move, the more you kind of wish you did it earlier after you make the move.
Yeah, I think there's some type of rule where it's like 36 hours is the time frame where it's painful to let somebody go, and then you kind of get over it on both sides, right? I think there's like this ripping off the Band-Aid where it's like, yep, we're better off that they're not here. They're probably better off that they're not here, and we can all move forward in an upward direction. So, yeah, there's always that should have done it sooner. Sometimes you get that kind of methodology where you think about maybe this would have been better if I would have done it 6 months ago or 6 weeks ago. But I guess kind of better late than never from a talent change perspective. Are there key positions within these businesses that you kind of want to try to identify? And I know it's hard during the diligence phase, but maybe in that 100 days where it's like, these are the key roles in this business that we need to make sure we've got an A player in. Hopefully you've got an A player existing in that business that is either in that role currently or maybe is ready for that role. Are there any key roles that you're like, really need to make sure these are the ones that have that level 1, tier 1 talent?
Yeah, I mean, it always starts from the top. So specifically, you really have to assess the leadership of the suite, excuse me, and mainly that CEO role. Is that, the person that's really leading the company? How is the culture underneath that person? Is it thriving or growing, or do you see limits in that? There's some limit in capability, basically. At some point, especially when a company has grown through certain stages, you reach a capability level with that leadership team or that leader in general, where the company just can't grow much further their capabilities, and you need to make a change there as well. So I think focus, first of all, is always on the C-suite and always on the leadership, mainly the CEO level. The CFO is also critical, as you know, in private equity companies, and tend to take a special individual to work with. Sometimes we could be very demanding on that role. So those are the two we look to first. The next one is really then the business leaders within the different, call it subsection or CEO plus one, as we call it. And then typically most of these companies haven't really thought about the human capital angle as well. So we usually bring in a senior, more strategic focused HR leader to take the businesses. In our case, they're industrial services businesses, so they are labor intensive. So we really believe strongly that role needs to be strong and strategic within the company. So that's one that we've added at all our companies, really.
And you typically see that the HR leader is not somebody that is strategic enough in some of these industrial services businesses. Are they mainly more tactical, and you need to bring somebody that has a more forward-thinking talent mind when it comes to, up-leveling talent and skill transfers and all of that?
Yeah, I mean, typically you find the people that are focused mainly on compliance, which is an important aspect of human capital management or payroll or some of the, call it, functional areas, but haven't really thought deeply about how to build a culture, how to really partner with the business team to deliver the right labor, especially, post-COVID. It's been a challenge to minimize, turnover, to be the employer of choice, to really bring high-level talent, to really develop the succession plans. Typically in these mid-market companies, as you know, you may have a strong leadership, but to find talent at the 2 or 3 levels below, or how to really develop people in the company has been a challenge. You just don't have the wheelbase to be able to do that. So it's bringing in talent to think about those type of problems and challenges.
And then from the CEO perspective, do you ever find it a requirement to bring in a new CEO? Or do you look for companies that have a stable CEO at minimum that you can continue to drive with post acquisition?
Yeah, I mean, it's been our experience that usually there is a CEO change during the ownership cycle. In some cases, it's maybe a founder that has already articulated their desire to move out of the business, or maybe it's just the business has outgrown the current capabilities, or maybe we just have the wrong person in the position. But that is a typical transition we see both in the CEO and the CFO position.
Got it. And then judging, we talked a lot about kind of the post-acquisition operations. I want to shift a little bit to the market and, what you guys are seeing right now. It feels like, industrial services, kind of AI resistant companies, if you will, are, a very hot commodity. How are you seeing the market right now as far as deal flow? Are you guys in acquisition mode, or are you more in kind of the roll up and kind of exit mode at this point?
Yeah, well, I mean, it's been an interesting environment. I would say mainly the cost of money has had an impact on the industry, no doubt about
Yeah.
it. The amount of deal flow, where it is. Our acquisitions were mainly made in 16 to 20. So at that
Okay.
point, the cost of capital is much lower. And then some of the inflationary pressures the businesses have faced. Certain businesses are more susceptible to that to others. So it's been challenging. I think a lot of the cash flow has been used to service debt in this case. If you're riding companies with a lot of debt, so how do you
Yeah.
reinvest and go forward in that? But it feels like overall, general sense is the market is turning around now. There is definitely more deal flow happening. There's smaller companies coming to market, so our focus on continuing to buy and build continues. And at some point here, when it makes sense to exit the companies, which I think as deal flow picks up and see where interest rates fall from where they are currently would make a lot of sense. So it definitely feels like we're on the cusp of more activity.
Yeah, well, we just got a half a point rate cut today, so
Yeah,
Fed's cutting rates more so maybe than what people thought. I think a quarter point was kind of the odds on cut, but obviously we got a little bit more than that today. When it comes to the bolt-on strategy, how hard is it to find a business one, and then be like, okay, we're going to go out and find other either similar businesses that are smaller that we can just cobble together and make it one bigger company, or do you also look at kind of other services that maybe supporting that business, so you kind of just build a little bit of a bigger beast, as it were, from a company perspective?
yeah. I mean, it's very important, and we put that onus responsibility on ourselves, but also on the leadership team. There's an expectation that that we know who the players are. We spend a lot of time with, let's say, smaller, very industry specific brokers that know who's selling and who's not, and then doing a lot of active reach out. We have a person specifically designated on our team to go ahead and do a lot of that reach out activity.
Hmm.
But it's a lot of the relationships that our executives have as well in the industry, where they know who are the people that would be interested, who are the good fits for us, and then who would be interested in joining the platform as well. So I would say it's a team effort. It's a lot of hard work, a lot of phone calls, but it's really just identifying who are the likely candidates, and then start to build those relationships if those relationships don't exist already today.
Yeah, and how hard is it just to bolt on companies? From a there's obviously integrations that need to happen both from a systems and processes and talent and culture. Like, how hard is it? Obviously it makes sense on a whiteboard or on an Excel doc to add multiple companies together from an economies of scale perspective, but from a rubber meets the road perspective, how hard is it to actually do that and make it successful?
Yeah, no, it is, and it's a muscle that you have to exercise as well, and you get better at it. It's time. So as you work on integrating, you learn what you did wrong, what you can improve on, and do it again and again and again. But it is challenging, and I mean, usually the issues you have is first of all, is the culture right? Is a good cultural fit
Yeah.
with the company? That's a number one. Who are going to be the leadership and how they fit into them. And I find it more successful to be very clear and upfront with what's going to happen and the expectations, rather than a tendency to wait and kind of let things settle, and then be disingenuous to say that there isn't going to be change as we merge these two companies together. There is going to be
Yeah.
change, and here's what to expect with the change. You'll find that much successful, and the more you can get people on board with the vision. And it gets back to leadership, and who's really leading the platform at the top. But once they get an idea of a vision of what it looks forward and the opportunities that the people have within the new organization, as you bring two of them together, I think a lot more actually can happen. And there's, of course, a lot of heavy lifting always with systems, processes, how you do things. And you just have to be clear and upfront of what that is, and then kind of drive a timeline to make sure that those things get completed on time.
Yeah, and I would imagine at that point having a strategically minded human capital person is also helpful for, different integrations of talent and duplicative, people and jobs? Because obviously, if you integrate two very similar companies, there's going to be people doing the same job. And can you retain that talent and integrate it into the business in other areas, or is it a pure we've got two people for one seat and we got to let one go as far as that goes? So making that determination, I think, is probably also a component of that integration strategy.
Yeah, it is. And then also you'll find some of the issues that you run into is some of the benefit packages and other aspects of managing people, or the rewards packages, or how you think about incentives in other areas, aligning those and matching those up, and be very, thoughtful about the details of those, and then how you're communicating any specific changes that will happen, because they do happen.
Yeah.
And a strategy around that is also very critical.
When it comes to AI, AI is, not necessarily synonymous with industrial services businesses, but are you seeing AI being integrated into these businesses from a workflow enhancement perspective, or any areas of opportunity for AI to be integrated into some of these businesses to get any type of, return or, improvement, from the bottom line perspective?
Yeah, no, that's a good question. First of all, AI is really benefiting our infrastructure businesses, specifically on the electric grid, as you can imagine. Then we have another that focuses specifically on data centers and services around that. So there's a very, we feel the impact of this huge investment going in AI from that perspective in the business side. But specifically utilizing AI at some of the companies, what we're thinking about now is setting up the companies for AI. So we have a couple initiatives where we're really thinking about data cleansing, bringing in AI partners early to go, okay, here's what we kind of can have a common vision about how we can utilize the tool. But we can't use the tool today because we're just not, our platform, our data is just not in a position to use that. So help us figure out a way to structure these systems the right way so that we can layer AI on top and really get the bang for the buck, as opposed to just putting AI on something that is not quite ready for it, just to say it's, have some AI capabilities. So we're just spending more time thinking about the right structure and the right data set to utilize the tool more efficiently when ready.
What about for the private equity side of your company? Is your company utilizing AI in any way, from deal evaluation or just any way? I'm just kind of curious how private equity is kind of thinking about AI for their own purposes.
Yeah, I mean, there's a lot of buzz out there. I haven't seen too many practical use cases yet here at Oryx, at least the fund I'm in. I hear promises of it, but I just honestly haven't seen it yet. I think there is a lot that can be done on the analysis side, where there's some specific processes with a lot of data that an AI solution could be helpful, speeding that up or utilizing less resources for it. But I honestly have not seen it yet.
Yeah. I think everybody's trying to figure out how to use it more so than just a chatbot, feature in a tool or something like that. So I think it's, we're still a ways away from getting it to, be fully integrated into some industries. Your background's kind of interesting in the sense that you have been in private equity for a handful of years at Oryx, but your early career was kind of in industry. And I was kind of curious how you made that transition from, a corporate environment, if you will, to a private equity group, because there may be people listening to this that are, sitting in maybe they're in a corporate development team or they're in just some type of operationally minded organization that have always wanted to be on the private equity side, of the world, if you will. How have you kind of made that transition?
Yeah, I mean, fundamentally, I started off in engineering. So my undergrad, my real passion was electrical and computer engineering. Just a little background on myself. I got my first job at Motorola. This was when Motorola was Motorola, back in the heyday of the early cell phones and the Razors and the flip phones. I mean, I'm kind of dating myself a little bit there. But fantastic company. Absolutely loved it. They gave me a lot of opportunities, early on in my career to really learn about business and running a business, and effectively leadership and some of the qualities that you need later on. And then I had an opportunity, went back to business school, got grounded in an MBA, and I graduated in 2008, which was a rough year to graduate business school.
Oh, geez, yeah.
Yeah. So, I was looking to pivot at that time to consulting or other areas, but then I had an opportunity to take on an international assignment. with a German company I was working with at the time. So I did that, which was a fantastic experience. Really traveling all over the world and doing different. It was an engineering discipline, mainly in automotive, but really learning about some of the skills in business and in manufacturing. Then I got a mentor that I was working with at the time, who was also an engineer that turned into an executive that started a career in private equity, really bought into this operating model of private equity. Now he started that earlier when they first started the operating partners in the late 90s. But he introduced me to the concept here and helped me adjust and really apply the skills and everything you learn about problem solving and engineering it really into this mid-market operating partner role. So that's when I made the pivot there. It was about 7-8 years ago, and really opened the door for me to really just utilize the skills that I learned in my corporate professional career, really in the mid-market. And that was kind of the trend.
Yeah, and it's kind of interesting. You're almost like a consultant with these mid-market companies, because you're going in to obviously help them build efficiencies and solve problems, but also obviously you're on the private equity side, so you're trying to make a return for the investment and all of that. So I think that's kind of an interesting career trajectory. I always get being in the recruitment world and seeing people's backgrounds for a living. It's always just curious and interesting how people transition from one job to another, or one industry or one career into another. So I appreciate that. That's interesting. And when it comes to kind of maybe a crystal ball perspective, we're sitting here, it's September, 2024. What do you think from, maybe a market standpoint or from, an Oryx standpoint, the next 12 months kind of could look like? And obviously we've got a lot of things in the next few months that could change that trajectory one way or another with an election and all that. But, what are you kind of thinking the next 12 months could look like for you and the space that you target?
Yeah, no, I think there's continued opportunities to improve on the investments made, and then see the opportunity to harvest those investments as deal flow picks up. So I really see there's a lot of assets that have been on the sidelines, mainly through this period of high interest rates. And I would say the spreads on some of the deals have been too wide, that now with the interest rate reduction that we just had and some confidence we have, and I think once we get the election questions behind us a little bit, I really see the market picking up and deal flow picking up. So I think that's an opportunity both as a seller and a buyer. And it just feels like, I think it's going to be market specific. Certain markets still have kind of a hangover, and other markets don't. Take, for example, data center and AI. It's red hot right now, the investments going in there. So if you have assets specifically there, I think they're worth trading, or if you're looking to get in that space, it's a good time to do so. But other sectors, still have an overhang, on the environment that we had in the past. But I really am optimistic about the amount of deal flow that's going to pick up, and we'll see. So really, it's a matter of continuing to do what we do, and then looking to exit, and then re-up the portfolio.
Have you started to see the kind of delta between what sellers are asking for as far as valuation and what the private equity side, what you guys are actually thinking the companies are worth? Have you seen that delta start to shrink over the last handful of months?
Yeah, I think so. There's just been more. I think overall deal flow, it feels like where discussions are being had, and some things are closing. So I think overall the indication is there. Yeah, the spread is widening, and it's really about, I think, when a lot of these assets were purchased, what the cost of the capital was, and then what the valuation is today. I think the Class A assets are trading, but really it's kind of the Class B or lower assets to see when they start to trade.
Yeah, no, that's a fair assessment. I appreciate that context. So, as we wind down today, I really appreciate kind of walking through, the operating structure, because I think it's, obviously, I think that it's interesting because I talked to a lot of private equity, and they, have a very, some have a very operational approach. Some have a more, trust the process and let the companies run and manage it, from their boardroom. So I kind of interesting to always hear the different sides of that. So I appreciate it. But I want to kind of end here with a 3-pack of questions that I ask every guest that are less business related, more about Scott. So First question is, what is your favorite business book?
Oh boy, favorite business book of all time? Yeah,
It could be all time, or it could be right now that you're reading. It doesn't have to be a all time favorite unless you have one.
yeah. Well, I always like Good to Great
Okay.
with Jim Collins, and I think it's just a mindset of the private equity industry and what we're trying to build. And I always think of private equity as business builders. Really, the reputation that they have is more of maybe a cut or a tear down, but fundamentally private equity is a great space to really take businesses that are good and move them up the scale and really build them. And the principles in that book, I think, are really solid. And it's about getting the right leadership and the right people on the bus in the right seats, and then really driving a strategic vision forward and really making good companies, great companies. Yeah, I think it's synonymous with the private equity industry.
Yeah, no, I think it's a great book in general. So good choice. Second question here is, what is your favorite thing to do away from work?
Yeah, well, I have two young boys,
Okay.
12 and 7, and it's a great age for sports. So youth sports, it just seems to be where I'm spending an awful lot of our time. I live here in Texas, so sports is quite big in Texas. So it's just really enjoyable watching them participate and then even coach or be a part of that.
Are they in football or what are their sports of choice?
Yeah, football and basketball and baseball. So yeah, I guess the gamut.
So you're busy all year round, essentially.
Yeah.
Is what it means.
Yeah,
Saturdays,
the more the
Sundays
merrier. Tennis as well when you can roll that in, but pretty much all sports here with the two boys.
Yeah, it's interesting to think back about my childhood. Both my sister and I played soccer, and I played on some travel teams and all that as a kid. And you don't think about the time commitment and time and everything that your parents put into traveling to and from, and the costs of staying in hotels and all that stuff. And as an adult, I see my friends who've got kids at that age, and they're traveling, and every weekend's booked. And yeah, it is definitely I put my parents through a lot as a kid, going to different soccer games and all that stuff. So fair enough. All right, last question here. Favorite vacation spot?
Oh wow, this is going to differ between my wife and I.
Okay.
So my favorite vacation spots is skiing out west, or any other place across the globe. I kind of like the winter sports, but my wife loves the beach, so she really enjoys the Panhandle of Florida, the Dustin area, if you're familiar with that area. So I do my ski trips in the winter, and then she gets her beach vacation in the summer, and we both enjoy them.
Hey, that's not a bad life to be skiing and then go rest on the beach and in the summertime. So this has been awesome, Scott. It's really great to get to know you a little bit more, learn more about your story in Oryx Capital. If people want to learn more about you, or maybe kind of pick your brain about the operating style of Oryx and how you kind of got to where you are, what's kind of the best way to catch up with you?
Yeah, I think just pop me something on LinkedIn. So I am on LinkedIn there, Scott Phillips at Oryx Capital Partners, and happy to have any discussion with anyone.
Awesome. Very cool, Scott. It's been great to have you on. I really appreciate it, and we'll talk soon.
All right. Thanks, Justin. Appreciate it.
I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.